Joining me now is Bank of America's Bryan Spillane. Bryan, welcome.
Hi, thank you.
It's an amazing stat here. You say the bottlers have outperformed by 38% over the past 12 months. Is that right?
Yeah, that's right. That's right. And it's, I think it's a couple of stories, right? One is mid cap versus large cap. One of the things we've seen in this market, especially this year to date, is, small and mid cap stocks have outperformed large caps. So bottlers are a way to get exposure to that small and mid cap. The other thing I think is just the direct leverage, right? Two of the real big themes in the market has been both volume recovery stories and margin recovery stories. The bottlers more directly, connected to that, given that they've got that point of contact with retailers and with the consumer. So we think it kind of fits two themes so far year to date. One is small and mid cap, and the other, again, is both volume and margin recovery. Give us some examples of who these bottlers are, and why should we expect their gains to continue and not see a reversal, maybe, of, hey, let me fly to safety with Coke itself or Pepsi itself, larger cap, maybe more defensive in a weakening macro? Yeah, that's a great question. So, look at Coca-Cola European Partners, symbol CCEP. They're actually going to report earnings tomorrow morning. Western Europe and Australia and New Zealand are their territories. And if you look at Coke's results today, right, they talked about strength in Western Europe. They talked about strength in Australia specifically. So, again, it gives you CCP gives you exposure to the parts of Coke's results that were very strong. Another one I would call out is Coca-Cola Hellenic. It's covered by my peer in Europe, Andrea Pistacchi. Same idea. Western Europe, their European business up pretty strongly, we think. And even if you look at Coke's results ex-Russia, which was a drag into the prior year comps, again, talked about that Europe region being strong. So we think that's just two examples of stocks where you've got exposure not just to those themes we called out, but also parts of Coke's business that are actually doing pretty well. Yeah, that's like a running sub-theme of the show today, this European strength. Quick final comment. We have Monster listed here. Coke itself mentioned how it's some of the plant-based and newer products that are doing better, whereas traditional volumes are a little bit weaker, sports in general. So what other kind of macro trends do you see here? And what do you think about Monster itself if you cover that one? Yeah, sure. Pete Galbo from my team covers Monster, so we can talk a bit about that. I'd say two things from a macro perspective. One is lower calorie, zero sugar. And you've seen this with Coke, Pepsi, Keurig Dr. Pepper, the performance of these zero sugar products. They taste better than they had historically. They address a consumer need for lower calories. So we've definitely seen great performance from zero sugar products in general. And as we kind of look at hydration, Smart Water, for instance, for Coke performing very well. And there's definitely more diversity in the product portfolio. And then just quickly on Monster, look, Monster will fit at some point the bill of being a margin recovery story. They've absorbed a lot of inflation over the last 2 years. We think it's still a little bit early, but I think as we kind of move through later this year, and that if that does emerge, that should be a real catalyst for Monster as we go forward. Yeah, starting to outperform year to date. I enjoyed this, Bryan, very much. And your last name is so apropos. Thank you for your time today.